Okay, let's also take a quick look at the markets and see how we're faring this morning. Like I mentioned earlier, the mood has turned toward the bears. We are 68 points down on the Nifty, 12,680. The mid-cap index, however, today is holding out pretty okay, 0.27%. The auto index also pulling its weight, up 0.25%. Today, the big loser is the banking stocks. In the banking index, Bank Nifty is down 405 points, or nearly 1.5%. So in terms of those losers, Kotak Bank taking a bit of a hit today, 2% down. ICICI Bank also taking a bit of a hit, 2% down. And then, of course, SBI also 1.6% down at 230. So three big banks pulling down the Bank Nifty. You also have ONGC and then Coal India that are really lackluster in trade today. In terms of what's doing well, you have Shree Cement, Pharma, Hindalco, Cipla and Divis. These are all the top gainers on the Nifty. The breadth is currently in favor of the bears, 27 to 23, as far as the Nifty is concerned. Let's now get on with our show. And for the very beginning, we have my colleague Ruchi, who's joining in on the mega bonanza festival season. Sources have told ET now that a much anticipated third round of government stimulus is likely to be announced in the next 2 days. The size of the mega package is pegged at 3 lakh crore rupees. So Ruchi, take it away.
A big Diwali bonanza could be in the offing. Remember, the government has been saying that an economic stimulus is in the works and they will push the accelerator for the economy at a time that is going to have its maximum impact. We're given to understand the government believes that this time, just ahead of Diwali, could be an opportune moment. In fact, we're given to understand that Finance Minister, along with the secretaries in Finance Ministry, will be chalking out a plan, and there may be an announcement as early as this evening or tomorrow. Of course, coming in just ahead of Diwali, the government is hoping that this is going to do enough in terms of reviving demand in the economy. Having said that, I'm given to understand that this will also include the current economic stimulus, will also include the PLI scheme announcements that were approved by the cabinet yesterday. The cabinet yesterday has approved and widened the scope of production-linked incentives for as many as 10 sectors. We're given to understand the total package will be close to 3 lakh crore rupees, including the close to 1.5 lakh crore rupees that have been approved as a part of the production-linked incentives. Having said that, the focus will be on stress sectors. The focus will be on employment as well. So needs to be seen how soon we can see the announcement from the Finance Ministry. Having said that, this is going to be a Diwali bonanza coming in by the government.
Thanks a lot for that, Ruchi. Definitely all eyes will be on that big event and the address from the government. Moving on, let's touch base with the management of Ashoka Buildcon. While the mood of the market seems to have dipped a tad bit, Ashoka's stock price is flying away in trade. Let's touch base with the management to understand what are the key triggers for the performance that they delivered and the way forward. We have with us Mr. Paresh Mehta, who's the CFO. Mr. Mehta, thank you for joining us this morning. Could you start by talking to us about what led the strong growth on the bottom line? Were there any one-time benefits seen?
Good morning. Thank you for having us on the channel. Wishing all the viewers a very happy Diwali. And definitely to the company. The company also has done well in this quarter and this half year overall, in spite of the COVID situation. So the run on the numbers has been that we have had 7% growth on year in spite of a bit of aberration on the COVID performance. But our margins have also increased to almost, PATs are increased to 11.3%, basically driven by execution and a couple of projects coming to an end and releasing substantial margins to the bottom line. So this has typically driven to an EBITDA of almost 20% and a profit before tax of 15%.
How's the order pipeline looking? Because everybody and a host of other subsectors are dependent on infrastructure activity pick up in a big way, whether it's the CV space, the entire automobile space, etc. So could you tell us how the infrastructure activity has been for your sector and what is the order pipeline looking like?
The sector has done very well in this half year. NHAI also has released more than 1,500 kilometers of roads for development. And there's almost most of the companies are full with orders, so it's good for the sector. The company Ashoka Buildcon also received orders of more than 1,500 crores on the road and other sectors, and we stand at an order book of 9,300, which is more than 2x of our trailing turnover. So we are quite well placed in execution also.
So hi, Mr. Mehta. Good morning. Also, so since we're seeing such a big uptick now in this quarter's performance, can we expect this to continue through into 3 and 4 at a steady rate? Will it increase or might it be a bit lumpy?
So as trend defines, the second half of the year is always better than the first half. So we definitely will continue to show robust performance on the EPC front for the H2 also, and achieve at least 1x of our trailing last year turnover in spite of the COVID 1 month loss.
Right, sir. And then, just in terms of that 9,000 crore order book, which is 2x revenue, so then how much of that potentially is executable in the next 2 years, let's say till FY22?
So almost 80% of this order book would get executed in the next 2 years' time. So because that are the general timelines of execution targets. So these will get over and new orders would come in due course. A lot of bidding happening at the NHI and other sectors. So definitely we see a good execution and order intake in the future.
Mr. Mehta, since the outlook for the second half looks good, what is the full year guidance you'd like to provide us on your margins, on your revenues? If you could shed some light, and beyond that also, if you have any projections internally.
So as I said, we'll definitely try to achieve a 1x turnover of last year, which is approximately on the EPC front around 4,000 crores, or on the total console 5,000 crores turnover. And we would try to maintain a margin of 13 to 14% EBITDA margins by the year end. Could do better, but I would give a conservative minimum number of 13 to 14%.
Okay. Great chatting with you, Mr. Mehta. Good to get insights on what's happening at the company's end and the infrastructure space at large. Thanks once again for joining in. The stock price of Ashoka Buildcon is on fire, up a good 5.5% as we speak. Let's move right on to Jayesh. After 8 days of rally, are there signs of overheating in the market? Jayesh is standing by with more insights on that.
Both the Nifty as well as the Nifty Bank have now rallied about 8 days in a row, and it has been a liquidity driven rally that we have seen in the markets, which has ensured that the market has become extremely overbought and overheated, at least in the short term. And there are two interesting charts that I want to highlight for you. One is the trend of how the number of stocks on the Nifty are actually overbought, which stands at nearly 40%. Now, this is the highest level that we have seen in over 5 years. Remember that in the past, whenever we have highlighted 25% or more stocks, if they become overbought on the Nifty, the immediate next few days result in a 2 to 5% down trick for the Nifty. So it will be very interesting to see this time around if history repeats itself or not. But the other chart that I want to highlight is once again the number of stocks or the percentage of stocks that are trading above their 200-day moving average on the Nifty, and that currently stands at 88%. Also, this is the highest level that we have seen in over 5 years. Now, what does this indicate? Is that this is a broad-based rally, because we are seeing more participation coming from various sectors and stocks for the Nifty, instead of the polarized market that we had seen a few weeks and months back. So once again, very interesting trend to note, and definitely look forward to how this entire scenario plays out.
Okay, Jayesh, thanks for that interesting analysis as always. Let's slip into a quick break here. We'll be back shortly. Hello, welcome back. You're watching ET Now, and this is Buy Now, Sell Now. We're now joined by a very special management, Sunita Reddy, who's the Managing Director at Apollo Hospitals. Good morning, ma'am, and thank you for taking out the time to talk to us. Talking about the results that just happened, your usual margins around 14-15%. Q1 saw a drastic fall off, and now in Q2 we're back to around 11-12%. So what's the guidance here? And are we back at normalized levels?
Yes. So if you look at our total revenue, we came in at a revenue of 2,414 crores. This is with standalone EBITDA of 248 crores. So clearly, there was our EBITDA margin has moved from last quarter to 10.7% versus the 18.4% which we were last year. So clearly, there is room for improvement, and we do hope to get there. The pharmacy grew really well. If you look at SAP, on a standalone basis, it grew by 15%, but on a consolidated level, it grew by 25.4%. EBITDA at the pharmacy was at 89%, was at 89 crores. Clearly, a margin of 6.4% against last year's 6%. So a margin improvement there. I must mention at this time that AHEL is now accepting 80% of the revenue and the EBITDA of the pharmacy. 20% moves to the front end. With this, if you look at it on a consolidated level, the EBITDA margin of the pharmacy is at 7%. So there was exceptional growth also happening from our new hospitals, which delivered a 5% growth and 296 crores of revenue.
Hi, Ms. Reddy. It's Karunya as well joining in. How do you see the digital transition in both businesses? If you could give us some color on that. Is that leading to better reach and better efficiency perhaps?
Yes. First, I have to say that, at Apollo, we've incubated a model which is both about the offline and online. So this quarter, we added 70 stores, and we now have 3,850 pharmacies. And if you look at the store location, 40% of India is only 50 minutes away from a Polo store, which is why our online foray will be far more effective than anyone else. Because in the online, the time to deliver and the prescription fulfillment are very important. And I believe that we will be able to do this very effectively. As you know, we launched 24/7, our digital initiative last quarter. We've had 5 million active users. So clearly, the online presence is growing significantly. We also currently do about 2,800 teleconsults through our online digital
Right,
platform.
Mrs. Reddy. And we now have some really positive information about phase 3 trials of the vaccine. It seems that we have a vaccine that might soon be available to us. So while that makes its way over here to India, what's the infrastructure that needs to be created for distribution and proper facilitation of vaccination of everyone over here?
It will. the more important things to remember here is, how many doses of the vaccine will we get? The second is what we're looking at right now. Everyone probably needs 2 doses of the vaccine. So that also is something that we have to consider. The third is that we will work with the government. You have to have a very solid cold chain process to keep the vaccine at the right temperature. So which is why, it's very important that we develop the cold chain and the whole infrastructure around it. So we are working at it, and hopefully by January, everything will be in place, and we will work with the government and with their guidelines.
Thanks, Ms. Reddy, for joining in and sharing all these updates with us this morning. Apollo Hospital stock, meantime, is trading weak. It's lost about 3.5% as we speak. Let's touch base with Kunal Bothra and Raghavendra Kedia, both of them joining in for their respective stock ideas for our viewers. Markets in the meantime looking pretty weak. Nifty is down by about 80 points. 12,669 is where we're perched at. Sensex has lost 300 points. Broader markets trying to keep their neck above the water. Kunal, hi. Would you like to share with us your tips for a market which, like you said yesterday itself, is poised for a bit of a consolidation? Which are the stocks that stand out for you from a high risk or low risk standpoint?
So I'll suggest a couple of high risk trades over here, Karnya, and good morning first of all. So I for one believe that the markets are now going in for a decent correction or a consolidation from current levels. So you can look at the sudden halt to the pace of the market rally. I think that's an evidence enough that this halt towards the pace could either result into the indices going into a slight bit of a time correction. By slight bit, I mean at least for the next 1 week or they can go through a price-based correction, and that I think we can keep on reviewing on a regular basis. So in that light, I would suggest 2 sell calls. The first one is a sell on Kotak Bank. Now, yes, the stock has done exceptionally well. It's very close towards its all-time high levels. But then when I look at the pure weight of evidence of the indicators, whether it's RSIs, whether it's the other momentum indicators on the short-term time frame, it indicates that the stock has entered into the overbought kind of territories, and it could warrant some sort of a cool off over here. So would suggest a sell on Kotak Bank. Targets of 1720. Stop loss could be kept at 1820, which is approximately yesterday's high. The second is a sell on Hindustan Petroleum. The stock again has done pretty well for itself. In last 10 days, it's recovered from 170 levels to almost a 210, 215, where it's trading currently. So Hindustan Petroleum, HPCL is also a sell. I would expect the stock to correct and come back towards at least a 205, 206 kind of a territory. Stop loss could be kept at 220 on the sell call.
Okay, those were Kunal's picks. And how about you, Raghavendra? What's catching your eye this morning? High risk and low risk for our viewers.
Good morning. Let me first start with the low risk, low reward idea, that is Supreme Industries. Supreme Industries has a history of wealth creation, and we believe that this would continue in the months ahead. This company is extremely good in terms of corporate governance, and its debt-free position makes it a portfolio stock. The recent COVID pandemic, earlier the demonetization, the GST implementation, all these developments have dented or negatively impacted the smaller or unorganized players, which has led to a margin gain or a market share gain for Supreme Industries. So we believe that this would continue. We expect the full year EPS of Supreme Industries to be 50, giving a PE multiple of 36 and a target of 1800 from current levels. So that is a 30% upside for Supreme Industries as our low risk recommendation. Moving on to an high risk, high reward idea, we have HG Infra Engineering. The stock currently trades at 186 and we have a 50% upside target at 270. This is a capital intensive business of construction and infrastructure development, and the promoter holding of 74% in this capital intensive business is very comforting to us. From 2015 year, the company has emerged and graduated from a Rajasthan-based subcontractor in 2020 to a pan-India based infrastructure developer. In 2015 year, the order book of the company was just 1,000 crore rupees.
and currently stands at 6,500 crores. So that is a 6-time growth in the last 5 years for HG Infra on the order book. They have a very good revenue mix of 80% EPC and 20% HAM projects, which would continue in the quarters ahead. So that would be a 50% upside from current levels on HG Infra to buy at 186 for a target of 270. That is a 50% upside in 1 to 1.5 years from here on as a high risk, high reward idea. Thanks.
Thanks. Then let's move on to some email queries as well. But we'll go to that after this short break. Request Kunal and Raghavendra to stay on with us. And of course, our viewers, stay tuned. We'll get you more queries on the other side. Welcome back. You're still watching Buy Now, Sell Now. Time to get some viewer queries addressed by our experts. Kunal and Raghavendra are with us on the show right now. Thank you for waiting by, gentlemen. First up is an email from Sachin Punjabi, who's based in Mumbai. He's a beginner looking to invest a small sum of money and wants our experts to suggest the first few must-have stocks in one's portfolio. Kunal, if you have to recommend something to a beginner, which are the must-have stocks that one should look at as they start their journey in the markets?
So, first of all, congratulations to the viewer, because he's starting off his journey to the stock markets. I think it's a brilliant journey which you should probably be going through. Now, coming to the question directly, I believe that every market trend or every, I would say, new bull market or the start of a new bull market has a certain theme or has a certain set of orientation towards key sectors or key themes which tends to play out in various stages of the market rally. And I for one believe that this bull market which you started from the COVID sell-off or from the 7,500 levels have been predominantly started by the two key sectors, which is the Nifty ITs and the Pharmas. So it's positive as well because of the defensive nature of these sectors with respect to the overall market, as well as the price performance into many of these sectors looks extremely strong. So I believe that if we can start off with a slight more focus towards the Nifty IT and the Pharma stocks as a basket of your portfolio, that would be a prudent enough strategy. These stocks are as it is available quite cheap from their, I think, 1 month or 2 month highs in that respect as well. So I think that's also an added positive for you because you're not buying them costly. You're buying them at a significant amount of discount. Whether it's a 15% or a 20% discount, depends on the quality of stock. Now, I think the other portion is that you have to concentrate more, I would say stock specific towards large cap names, have a higher proportion towards large cap names because that is where you will get a lot of safety for your portfolio, even if there is any kind of, in between market correction, which will probably happen, in a time to time basis. And then gradually, once you start building a robust large cap portfolio, is where you should start, looking out for trying to venture into those mid cap and maybe a few, odd small caps as well. So I think your proportion has to be more weightage towards large cap, maybe a 65% or a 70% weightage towards large caps, could be warranted enough. And then maybe add another, 15 to 20% odd on the mid caps and the remaining balance on the small cap names. I think that's how you should proportion. And of course, when you start off with large cap names, whether it's the Nifty ITs or the Pharma space, you also can't forget stocks like Reliance Industries, stocks like Bajaj Finance, HDFC Bank. These are quality large cap names which you should have as a part of your longer term portfolio.
Okay, thanks Kunal. You mentioned some really great stocks there. Raghavendra, does your portfolio mirror a couple names from what Kunal just said? What would your advice to Sachin be?
Well, thematically, I would agree with what Kunal said, that we have anyone who starts with the investment world would have to look into the large cap names, and the timing is very important for stocks which have not been gone up too fast in the recent past. So we believe one can also look at, or Sachin, the gentleman can also look at construction and engineering space. And our top pick from the large cap space in that particular sector would be Larsen & Toubro. The stock has underperformed Nifty, and we think that there is a big catch-up play for Larsen & Toubro to happen. So that is one portfolio stock any beginner can have in its portfolio. Moving on to a bit defensive play, we believe that automobiles have done very well in spite of this entire COVID pandemic. And from the automobile space, we like Hero Motocorp or Bajaj Auto. So any of these two-wheelers company could also do well. So one can look at Larsen & Toubro and Hero Motocorp from the large cap space to begin with in the investment world. These are large cap names which would be very good in a time horizon of 1 to 3 years ahead and should be in your core portfolio going ahead.
Okay, Raghavendra, thanks for that. Looks like Sachin's going to have a very robust portfolio to start off. But let's switch gears, and our next query is from Arjun Vaidya of Bombay. And he wants to invest in a good logistics provider as they shall benefit from the vaccine delivery thrust. As we just heard Mrs. Reddy saying, that's very important. So he's looking at TCI Express and Blue Dart. Which do you recommend is his question. So Kunal, between the TCI and the Blue Dart, which looks more attractive to you?
Both of them have been doing pretty well. Blue Dart, of course, is one which is predominantly looking quite strong on the long-term charts because of its, I would say, history of stock performing pretty well. But many of these logistics stocks, whether it's TCI Express or Blue Dart, or if I can probably add Aegis Logistics or Snowman, etc., many of these names, they've just about gone through a very rough patch in 2019 and 20 start. In fact, 19 was the year where many of these stocks had gone through a corrective phase. So I think in that regards, you could probably have that one degree of I would say a possibility that these stocks can go through a corrective phases. But if you are okay to take that risk, then I believe investing in Blue Dart could be a much better approach because of the consistency of price trend, the consistency of volumes which flow in with the when the prices move up higher. So I think out of the two stocks, TCI Express and Blue Dart, my pick would be Blue Dart.
All right, Raghavendra, how about you? If one were to analyze the fundamentals of these leading logistics players, TCI Express as well as Blue Dart, which one would you lean towards?
We would prefer any company which is cheaply valued, and we believe that Blue Dart has a very high P multiple considering its MNC multinational parentage. So if you look at fundamental valuations, the TCI would fare well, which with a full year earning of 15, the stock still trades at a multiple of P multiple of 15-16. So this is a good entry point for TCI to enter on a fundamental basis. But broadly, we agree with the theme that this entire COVID pandemic and the vaccine rollout would be very good, and also the weightage on logistics internally for domestic business and transport and e-commerce pickup. The entire logistics space would do very well in India. So one can look into these stocks with a positive bias, and TCI fares well fundamentally.
Okay, Raghavendra, thank you. And on that note, a big thank you to you both, Kunal and Raghavendra, for joining us this morning. We're now done with the query section of BNSN. It's almost time for a break, but before we do, let's look at the BNSN stock cloud for this morning. 10 stocks that we're flagging off for you. And it's very interesting, of course. Few of them are surrounding results and few surrounding what might happen today. So let's begin with Coal India, which just reported numbers. Profits were a bit suppressed YOY, but decent show from them. You have Aurobindo Pharma as well, which has just been surging for the last couple of days. It's also very closely linked to what might happen on the vaccine front, so stay tuned to that. You have Indiabulls Housing, again, numbers linked, which one might call a mixed bag. We have Infosys, which is regaining a lot of lost ground from the IT pack, an IT heavyweight that's done very well, post its recent slide off. We then have Shree Cement from the cement pack, which is looking quite upbeat. Apollo Hospitals, Ashoka Buildcon again on numbers. We had the management here earlier this morning. LIC Housing Finance, IGL, and a Gujarat State Petronet. Now, a couple of these PSUs that we're talking about, it's because the stimulus package announcements that are coming soon, they might have some bearing on these various stocks. So keep your eye out on these. That's the cloud for this morning. And it's time for a quick break now.
Welcome back. This is Buy Now, Sell Now, and it's time to reveal our quiz champions and, of course, the answer. We asked you this morning which of the following hospital chains has the second highest number of beds in India. The correct answer is Max Healthcare, and the champions are Rihab Kasim, Dr. Geeta, and Krishna Kishore. Congratulations and thank you so much for participating, all of you. Meanwhile, LIC Housing Finance numbers were also out last evening. Mr. Siddhartha Mohanty, the MD and CEO, joins us now to talk numbers. Ms. Mohanty, pleasure chatting with you. First up, I'd like to understand the profit, of course, was above street estimates. Provisions also saw an increase on a sequential basis. How are you approaching provisions? Will it see a QOQ rise in the next 2 quarters as well for this fiscal?
Q3 I expect better because it will not go up, because if you look at our collection is showing excellent, more than 96%. Non-moratorium cases, they have started paying. So that is a good indication that coming quarter, present quarter, things will be better.
Right, sir. Good morning. This is Varun Hiremat also joining in. How are disbursements in Q2? And how far are you now from the pre-COVID levels in terms of disbursements?
You see, we have reached the pre-COVID level. And if you see, this quarter, we have shown 21% growth over previous quarter of that, this quarter of previous year. And in coming days also, particularly October also, we have also experienced a good growth in disbursement. And most disbursement is in retail home loan segment. And there is a huge demand. Actually, so much demand, it is beyond our expectation. And all the metro cities, they are doing excellent. And in this quarter, third quarter, I expect a good growth in disbursement.
Ms. Mohanty, predominantly into affordable housing space. Can you tell us if the bulk of the demand is coming from Tier 2 and Tier 3 cities? And given the backdrop, if you see your lending book shaping up with a higher mix coming in from these smaller towns and semi-urban areas, if you could tell us some more about this.
Mostly demand is coming not only this 7 metro, but also Tier 2, Tier 3 cities. And what we have experienced in recent time, in addition to constant enhancement in demand in affordable segment, there is also some interest in mid segment and upper mid segment. So this new trend has developed last 2 months, September, October, I have experienced mid segment and upper mid segment. In addition to constant demand in the affordable housing, this is there. So these will be the driver of growth. So in the coming days, this last 2 quarters, third and fourth quarter, we will see good jump in this segment.
And given that the festive season is here and there's an increased awareness for our own houses amidst the pandemic, where do you see the loan growth going for H2 of FY21?
Already you see, last we experienced a 21% growth. And currently we are experiencing more growth, particularly October, if I see, huge growth is there. But at the end of the year as a whole, over FY20, it will be definitely double-digit growth will be there. Minimum double-digit growth will be there in the current year.
All right, Mr. Mohanty, thank you so much for giving us your time this morning and an update on what's happening at LIC Housing Finance Limited. But let's switch gears, and as part of our special investor education series, Nivesh Ke Funde, SIPs that have become an integral part of our day-to-day language. But not many people really know how they work, and some people think that they might be restricted only to equity mutual funds. So on this edition of Nivesh Ke Funde, we take a look at SIPs in debt funds. Let's listen in.
You know, Avan, an often asked viewer query is whether investors should consider doing an SIP in a debt mutual fund.
Investors can consider putting their money into debt mutual funds if the roller coaster ride of equity funds is not for them.
In fact, investors could liken doing an SIP in a debt mutual fund to, say, doing a recurring deposit with a bank.
With one major difference, that returns from a recurring deposit may be guaranteed, but returns from a debt fund will be varied.
Well, that's true, Avan, because debt funds invest in corporate bonds, in commercial papers, government securities, other debt securities, which do tend to carry some amount of risk.
While the risk is definitely more than that of putting money in a fixed deposit, it's sizably less than investing in equity mutual funds.
But just like in equities, Avan, an SIP in debt assets too can help you ride the volatility in the debt market.
So if you're a risk-averse investor but still want to invest in a different class other than a bank deposit, then consider putting your money through an SIP in a debt fund.
And that's all on this edition of Nivesh Ke Fund Day on Times Network. Thanks for watching.